I would coin it mega crisis. It's mega crisis.
I've been waiting for a few years for a gold revaluation. It's part of the big reset thesis. So we'll have a gold price revaluation. A young, new incoming central bank president in the Czech Republic, he said, we're buying gold because it doesn't have any counterparty risk.
I would coin it mega crisis. It's mega crisis. So that's food crisis, energy crisis, and war, geopolitical crisis. And I think governments and central bankers are almost panicking because they solved each and every crisis in the last 20 years by printing more money. You can print as much money as you like. You can grow the balance sheets of central banks as far as you want. There's no limit. You can grow a central bank balance sheet. But once people lose trust and once inflation kicks in, you can't do anything. You need to raise rates, but you can't raise rates. They're actively raising rates from 0 to 1%.
Right.
Paul Volcker, he needed to rescue this system in 1980 by raising rates to 20%. And we need to go back to a little bit into history. We had the start of this dollar system, Bretton Woods, 1944. The dollar as good as gold. The dollar was fixed to gold.
Yes.
That went well until the 1960s. Then the US printed too much money. They lost control over gold. Gold went to $800, from $35 to $800 in a number of years. There was a dollar crisis, there was inflation in the 1970s. Paul Volcker needed to rescue the dollar system, he did. And then we had 20 years of declining interest rates. So then, after 1980, we had 20 years of declining interest rates. Gold was coming down. And then we had the start of the first crisis in 2000. The tech bubble imploded. Then we had the second crisis in 2008, the real estate crisis.
Right.
And then we had the third crisis that was in 2020 around COVID. And we solved all these crises by printing money. And now, the buck stops here. Now they're trapped. Because you can only solve this situation by raising rates towards, well, north of 5%. Rates should go up to 7, 8, 9%. Look at other countries in the world. They're raising rates to those levels to bring inflation down. But now they need to bring inflation down, but they can't raise rates to 10%. So what can they do? The only thing they can do is create a recession, create a soft landing, and that's what's happening now. Well, Jamie Dimon this week scared markets a bit by saying, prepare for the coming storm. And he said, I don't know if it will be a summer storm or it will be a Hurricane Sandy, but it's getting tough, especially I think next winter, because then we have this energy crisis, the energy price will still be too high. Look at the Eastern European countries, or countries like Lithuania, Estonia, poor people in Romania, they can't pay this. So there will be a huge crisis next winter. And you can even have this food crisis. If you see what's happening now in Lebanon, in Africa, there are some real footage already starting. And this just a few months after the war started. And this war won't be finished soon. They know what's coming. They know central bankers are trapped in a way. They know there's a huge debasement of currencies. The countries you mentioned is very interesting because they are part of the EU, but they're not part of the monetary union. They don't have the euro, they still have their own currencies. So the Eastern European countries who are part of the EU but are not in the euro, not using the euro, are growing their physical gold holdings by incredible amounts. Poland increased it 10x. The Czech Republic just announced they will increase it the next few years 10x, and Poland doubled it. So that's a real sign that they start, when central bankers start to flee towards gold, they're the guys who can print the money.
Right.
And actually the Czech Republic got rid of almost all of their gold around 2000. And you should never forget that the US advised all Western countries to sell their gold holdings in the 1990s. They never sold 1 ounce themselves, but the Canadians sold it all.
All their gold.
The UK sold all of their gold. The Dutch sold half of their gold. So there's a huge shift, and central bankers actually started to to accumulate physical gold again after the Lehman crisis in 2008. The dollar used to be connected and backed by gold. That was Bretton Woods 1 in 1944. Then in 1960 they tried to keep the gold price fixed at $35 per ounce. And they organized it through the London Gold Pool. It was an agreement of Western central banks to dump some physical gold each and every week and month to keep this gold price fixed to $35. Then in 1968, France didn't want to do that anymore and they got out of that agreement. And that caused a crisis for the US dollar. And then in 1971, President Nixon needed to take the dollar off the gold standard. So from that background, gold is the anti-dollar now. And that's why the undertitle of the Big Reset is the war on gold and the financial endgame. So there's always this war on gold from the financial institutions, from Wall Street. So they will never advise it. And it's shocking to see, and we all know, there have been so many studies on this topic, the gold price being managed by selling a lot of paper gold through the future markets, through the COMEX. I think we're in the reset. We discussed this before. But there was a very good study published by Credit Suisse, Sultan Pozar, who's a former Fed guy. And a few weeks after the start of the war in Ukraine, he published 3 reports. And actually, the title of his report is that we're witnessing the start of Bretton Woods 3. So Bretton Woods 1 was 1944, Bretton Woods 2 was 1971. And he said this is the start of a new monetary system around commodity-oriented countries in the East. And he's pointing to Russia and China working together. He calls the People's Bank of China, the Chinese central bank, the central bank of all commodities, because they can do all the arbitrage now. So we here in the West don't want to have the commodities from Russia now, but they all go to China. So China can keep all these commodities for their own use, or they can sell them. So China is getting much more powerful without firing a shot. And this Credit Suisse report clearly states that we're witnessing the change of the international monetary order. And it's now all around commodities. And the Eastern countries like China and Russia say, these are our commodities, it's your problem. The West loses. And we're still quite arrogant, because by all the sanctions we imposed on Russia, we think we have Putin cornered.
Right.
But if you study the sanctions, there are only, I think, the Western countries, which have 1.5 billion people living there, who agree on the sanctions. And there's 6 billion people living in countries in Latin America, Middle East, Africa, Asia, who don't support sanctions. So the West is a minority. But we still think we can make the rules for everybody to play. And now there's a huge disconnect between the West and the rest of the world. And if you listen to commentators on TV in China, in Middle East, and also India, they're fed up with the double standards in the West. I mentioned this example of a Dutch pension fund who sold 10% of their bond holdings after difficult discussions with the Dutch central bank and other regulators, and they exchanged their bond position. They bought physical gold and real estate. So now you're in this world with investments of over 300 trillion looking for returns. They can't find any returns in bonds. They can't find any returns in stocks. Stock markets are in a correction now. Crypto has crashed. So it's a huge problem. So it's no surprise that some of the investors are starting to look to assets without any counterparty risk. And the Czech Republic, the central bank president, a young, new incoming central bank president in the Czech Republic, he said, we're buying gold because it doesn't have any counterparty risk. And look what happened with Russia. If you confiscate the assets of a sovereign country, well, that's the best message for somebody to buy gold and store it themselves. I've been waiting for a few years for a gold revaluation. It's part of the Big Reset thesis. So we'll have a gold price revaluation one way or the other, or through central banks who
who will decide to revalue gold because they all have gold on the balance sheet. So their balance sheet looks better when you revalue gold. James Rickards is somebody who's been saying this for years.
Yes.
Actually, I stole the idea from, thank you, Jim. So we should get a gold revaluation. Actually, we've seen a gold revaluation to start already, because don't forget, in January 2016, gold was $1,000. And now we're around $2,000. And we made this triple top around 2000. Once we break that barrier, it's off to the races. And you can have a very sharp, quick rise towards 2,500, 3,000. And what's interesting, the move for gold in dollars is always the last one. We already seen a breakout for gold in yens. We've seen we'll show the graphs.
Yes.
We've seen a breakout for gold in euros as well.
Yes.
So the last one, which always starts running, is the gold price in dollars. And then we'll see a revaluation of this whole precious metals complex. Because if you look at this conference now, the undervaluation for exploration companies and junior mining companies is incredible. So there's a huge revaluation coming. And that's what we prepare for as investors.